It's like switching up my hands. Couldn't remember how to get
Which one I gotta do, Chrome or
computers. Yeah.
turn my phone off?
Oh, yes.
This takes me forever. Just had a moment, it's like it's not my password.
I thought I knew
Lauren
phone.
needs to come over and sit by us. Lauren's over there all by herself.
I know.
Maybe there's a reason.
Operating Trust Special Meeting for March 11th, 2024. Item 2, items for individual consideration. A, we first have on our agenda a resolution consenting to the assignment of the investment advisory agreement from & Co Consulting to Mariner, LLC. Essentially, Doug Anderson's here if you've got any questions, but essentially there was an acquisition merger, still with the same people, still working with Doug, but there was a name change as a result of the merger. Any questions? Okay, otherwise I take a motion in a second. Please cast your votes. The motion passes. Thank you. Moving on to item B, discussion of fiscal year 2025 fund distribution percentage. Matt.
All right. Well, good morning. I normally used to say good morning to you. It's afternoon. Good afternoon, trustees. We have before you today a couple of items. And Sean, if you don't mind going to the PowerPoint, this is where the rubber starts to meet the road for the MAPS Investment Trust, because a decision needs to be made for this year of what the distribution percentage will be. To set the scene a little bit, we do have the spending policy in front of you, which we'll look at one more time, which the goal is to spend at least 4% of that average market value of the investment portfolio over the last 12 quarters. The next few lines are very important. It will be reviewed and determined by the Board of Trustees, and it is within the board's discretion to determine the exact percentage and dollar value each year to be paid out of the investment portfolio to support the trust programs. So a couple of things to note with this. One, we do not yet have 12 calendar quarters at this point. Another thing to note is that when we make these decisions, and Chair Rose will have a little bit more insight to this, not every single one of our operators is going to be requesting funds this time around. If we're doing the same conversation 5 years from now, I don't think that's going to be the case. We're going to expect a majority will be asking for distributions at that point. So these first few years will be a little different than some of the others as far as planning and how that goes. And as each one of you very well know, it's an important decision because anything that we spend now, distribute now, takes away from some of those future earnings down the road. And so while we have our operators who are concerned with the day in, day out with their operating needs, part of what we're looking for is the long term with this trust, which is the mandate that we have through our indenture. And so some of those things in mind, go to the next slide, Sean. This is just a snapshot of where we are. Obviously, this doesn't really give you the full picture because we had our initial investment back in 2022. And so like I said, we don't have those full 12 calendar quarters yet. And in fact, until we had that second distribution back in 2023, we really weren't over the $100 million mark. And so our average market value has been $85,000 over the life of the trust at this point. But because you had the two separate fundings, that doesn't really tell the whole story. Really the best thing to do is, Sean, if we can go to the 1231 investment report, and let's go over to, yes, this page right here. 1231 is going to be the time that we're typically looking at this. And so we can see that the total contributions were $115.5 million. We have had distributions in the form of only claim payments, so those are going to be investment consultant, custody bank, auditor, those type of funds. So there have been no distributions to actual projects. That's just to pay the expenses of the trust, with a gain of a little over $5 million, with the ending market value of $120,451,000. That's a 3.51% return, and income of $4.4 million. You haven't received this yet, but Sean, if you can pull up, we do also have what February is going to look like, and that will be accepted at the next meeting. It also shows you really what 2 months can do, because this is as of February 29th, 2024, the ending market value is at $123 million. And so it really, especially during these early parts of the trust, even just single months can make pretty huge differences. So with that, really, this is where we would need to have some sort of a discussion of what level that the trustees would feel comfortable to assigning any sort of distribution percentage and amount. So this first item that we have is really the discussion, and then we have a resolution by whatever amount that we decide, which could be anywhere from $0 to a maximum of 4% of what the market value is, could then be applied. And so our resolution is written in such a way to handle both of those. And so really, this is where the discussion would happen. So I'll hand it over to the chair.
So essentially, so any questions of,
I do have a
Yes.
question. Can you go back to the policy statement, please? So you're stating that we could spend a maximum of 4%, but this says at least 4%.
Yes, that is correct. That was just from when we needed wording for the agenda. We needed to find something to say that would give us the flexibility without knowing what amount that you as the trustees would select, especially that here in this first year. We needed to just find some wording, and that was wording that the clerk's office and the municipal counselor's office were comfortable with, saying that we can set this cap at 4% because we knew it wouldn't probably go above that for this first year. So it was a wording issue, but that is absolutely correct. The spending policy does say for long term, the goal is to spend at least 4%.
Are there any?
did that answer your question?
It still doesn't address the fact that the policy says that we will spend at least 4%. I mean, am I missing that?
I'm trying to remember what the indenture states.
I'm thinking the policy says the goal
Yeah, it
is
says
to
goal.
spend
Yeah,
at
he's
least
thinking it says the goal.
4%.
Yeah.
But that,
Okay,
what we actually do is dependent on the board's
Right.
actions.
So I don't think we have to spend 4%. It says
well,
our
no,
goal
and
is.
then, on top of that, we don't have 12 calendar
Correct.
quarters.
Correct.
Yeah.
So is the intent that we base what we're doing on December or on some other month?
Well, I think that's for this body to decide. So I think it can be, we can look at December, we can look at February. We've got that to inform as we're thinking about percentages and/or dollar amounts.
I think going forward, really, especially when that timeline that we've had a few of the times we've brought before you, it goes into the assumption that we're using 12/31, so that by the February
Right.
meeting, we have an amount, and in the May meeting,
Right.
we can have that approval.
Yeah. When we get into our regular cycle, we'll try to always use that December. Yeah, I think Matt wanted to show us what, like you said, what 2 months can do. And so, I don't think that I think it helps inform what we're contemplating.
So if we're looking at this year's, I think our earnings at that point in time was 3.51%. So if we distributed more than that, we'd be getting into the corpus. So
Absolutely.
3.51 at this point in time, if we're looking at December, that would be our
Right,
upper end.
that would be our ceiling.
Okay.
I guess the question I have is, that is the collective amount.
Correct.
But that's not each separate portfolio, because aren't there 8 underlying separate portfolios, and does each one of those have to be at this sort of benchmark?
Looking at the wording of the indenture, and also that how our spending policy and investment policy is put together, it truly views to see this as one large portfolio. Now, on the custody side, do we make sure that each project is segregated in such a way that we know exactly how much is there?
Yes.
Absolutely. But there was no distinction in the indenture about each individual project, because it always speaks of the preservation of the corpus of the entire trust.
Right. And I think that becomes, that's a great point, Kevin, and I think it becomes even more important as we move forward. The investment strategy will be equivalent, but the balances are going to be different based on which projects choose to take a distribution and which ones don't. So yeah, kind of getting in our minds the distinction of the two different ways. I'm not going to say different ways of accounting, but different kind of tracking.
And I would agree with that. I mean, if you look at the spending policy, it talks about the spending being based on the average market value of the investment portfolio, not investment portfolio by project. So
Right,
we
per
should be
fund.
looking at the
Right,
overall.
right.
So, just so I'm 100% clear,
Absolutely.
we're trying to determine that when we get to 12 calendar quarters, what we're going to do. Is that correct? Am I missing something?
So in long term, yes, that is correct, but there have been projects that have operators that have approached both staff and members of the Board of Trustees looking to get their distribution sooner rather than later. And so at the discretion of the trust, we're having that conversation to see what amounts you would feel comfortable with.
Because the preference would be to wait for the full 12 quarters and not distribute any money. But, like you said, there are people at the door saying,
Yes,
I have a project that I'm completing, I need some assistance, and that's why we're discussing this today.
right.
Yes.
Yeah,
I-
that was my confusion, Madam Chair, was like, okay, why are we talking about this? So I guess the next question is, who needs the money and how much actually can we do?
Right. Well, those are different, those are a couple of different answers. I can tell you, I am aware of 3 projects that have approached me asking if we will be making a distribution in FY '25. And when they shared what they wanted the revenue for, went back and looked at the indenture, it's allowable, it's perfectly appropriate. And I would also go back to the spending policy. I think that it can be, because because this is the way we do it in my business, I have always interpreted up to 12 months. But, I mean, so we could interpret we don't have to have 12 months, that it's, but it's the number of months that we have up to 12 months and then a rolling 12 months moving forward. So I think we've got a little bit of capacity, or, that would be an appropriate interpretation of our spending policy. But we could also, as Brent pointed out, say, no, we're not going to distribute until we have at least 12 quarters. And then Matt, I'll let you answer the amounts that we're looking at.
And so really that comes down to whatever the
What
trust
percentage?
approves. And so
Yeah.
that's really where it's important to have this conversation and note that very last sentence that is within the board's discretion to determine the exact percentage and dollar value each year. And so it is within your purview to do nothing or also to assign something at this point.
Yeah, so we could look at the dollar amount that's over the corpus and say, what was it, about 20 million? No, about
For about a 4 million.
About 4 million. So we could say of that 4 million, a percentage of that, we're comfortable distributing out. Of course, it would be calculated among all of the projects, and then any project that wanted to take their portion, they could. So I think there's a lot of different ways that we could answer your second question.
I also think that it's important to note that if there are 3 that we know of, there could be more.
Yes.
That I don't know which 3 those are. I can imagine some of the concerns I've heard about the funding, but anyone
Right.
who is eligible
Yes.
could then submit an application.
Absolutely. And so I think that, to Laura's point, is very important. I think we need to be thinking in terms of what amount or percentage are we comfortable with being distributed, and then recognizing that it could be that high or it could be a little bit less, depending on what, I know some projects will not, have already determined that they're not going to take, but some are.
So theoretically, we could say something to the effect of, in this short window where there are a few quarters before the 12 months, we will allow X percent of whatever is above the corpus to be spent. And maybe if it's 4 million, maybe we say we're comfortable spending 50% of that or something.
Right,
Yes.
yeah.
And-
And that 50%, that 2 million would be by
Distributed.
percentage of the investment pool allocated per project.
Right.
Okay?
And whatever's not spent from that 2 million
Mm-hmm. Just
goes
stays
into
invested.
those portfolios,
Right.
those
Right,
individual
and
buckets.
that's where in the custody account, it wouldn't register any kind of a debit or a payout.
Right.
Right, that balance would retain up,
Right.
yeah. So,
I was only throwing that number out arbitrarily.
Sure.
But more so of saying, okay, if we're going to have the discretion,
Mm-hmm.
is it prudent to show some sort of conservative approach to saying, hey, we're not going to take everything, we'll just take some of it?
The staff recommendation would be to stay the policy to get the 12 calendar quarters, and do not want to speak for our investment consultants, but typically we'd like to see those investments grow as much.
We know
But
what
we
that's
also
gonna mean.
understand, we also understand that it's not, this isn't a science experiment, this isn't a math problem, this is real life. And so
Right.
there are actual projects that have funding needs, and so we're sensitive to both of those things for the long-term success.
yeah, Brent, were you going to add?
Well, the way I look at this is, part of me is, I really want to keep the corpus intact as much as possible, and the earnings. I would like to keep those, because again, we have not met the 12 calendar quarters. So when I look at it, we've gone through essentially 1 year out of 3. So you could look at it and say, is 33% an appropriate one? But before I would make that recommendation, I would like to ask, of that which we anticipate to request funds, what pro rata allocation would they receive? I mean, what do they make that up? Are they 50%? Are they 20% if you look at them? And to me, because that's going to weigh into, because I want to be as conservative as
Do
possible.
you have the slide that has the percentages per project? Okay.
Okay.
So it would be,
So the column C there, the percentage column, is what, as of the initial funding, what percentage each one of these projects makes of the overall trust. And so this is a hypothetical. So if we just did a simple, let's do $1 million. That if it was a $1 million distribution, this is what it would look like per project. It would be allocated based on our funding in the original allocation
And
percentage.
is it fair to say that of these projects, there's sub-projects within those projects?
that's another conversation. So just quick glancing of the projects that I know, 39% is
Okay.
our, yeah,
So if we-
39%
so
is
if we went-
interested.
So if we went at 25%, which would be about for the $1 million, so we would spend $390,000 this next year, allocate of the $4 million that we've earned,
If we
if
went
you
with
did,
those numbers,
using
yes.
that math. Okay.
Right. So I do think, and do we want to go ahead and pivot? Do we want to stay here and kind of come to some kind of determination, or do we want to go? Because Brent, I mean, this has been a concern that I've brought up in numerous meetings. There are several of these line items that have different operators. And so, and I'll just take like Innovation District, for example, like Boys and Girls Club, youth centers is easy, there's one operator. Innovation District, there's 3 different distinct projects in the Innovation District project. There's Innovation Hall, there's the H.B. Foster Center, and then there's connectivity, which is that Parks will be running. So, I mean, we have not dug as deep as to, because I've been thinking about this. One approach could be that we take that, so I'm just going to stick with the Innovation District, take that 18% and divide it out by percentage of the MAPS capital dollars for each of those projects. I don't know if that's equitable or that may not be equitable. Beautification is going to be really hard because there's upwards of 20 projects. But most of those are going to be Parks Department maintained. Senior Wellness Center is another project, because the way that the indenture reads, these funds can be used, operating funds can be used to support any of the senior wellness centers. Even though MAPS 4 is building the 5th one, this revenue can be used for any of the previous 4, which all have separate operators. So throwing out that little tar baby, what thoughts?
Madam Chair, I do think that those are two, as you stated, separate things we need to figure out. One, we need to figure out if we're going to even do it. And then the second would be that challenge.
Right. Yeah. So do we want to stick with the money for now? Who knew the money was going to be the easy part?
You're exactly right.
And the other context to this, and Doug brought this up after he sent us the February numbers, because I said what a difference 2 months makes. Well, he said, well, go back to October. As a whole, the trust was negative
Right.
in October of 2023. And so it really does show what can happen, how volatile this can be.
So what you're saying is this would have been a really easy conversation in October.
That's right.
Just say no.
It would have been, yes, that would have been much easier.
So, okay, remind me, going back to the number of months that it's been invested as of December,
Let's see, that would be
you had a slide, or number of quarters, excuse me.
number of quarters. Sean, yeah, that's on the next slide there.
There we go.
Okay, 2, 3, 4, 5, 6, 7 calendar quarters.
Okay,
And so we would be looking at March 2025, so a year from now, when we would have 12 calendar quarters under our belt.
okay, so we're basically missing 5 quarters. I was thinking about your train of thought of the, of the 4 million, what's that,
Oh, okay.
so,
So we're half.
2.4,
Yeah,
yeah.
we're only a little over 50%.
yeah.
So we want to make that available.
I don't know. 50%, I don't know. It's all, I'm trying to put some logic to it so it doesn't feel arbitrary as we're explaining it.
Didn't we have some initial numbers that were set out in the implementation plan for operating dollars per project?
I think it was, Jessica, the amount for each of those projects that was included in the resolution. So it would be the, $4 million for youth centers or
Yeah.
whatever. Yeah. But it didn't have like a breakdown that I recall of annual distributions. I don't recall that. What I recall is on the bottom of the page where it talked about the timeline in the budget, it would say like operating or maintenance and then the capital budget. That's what I recall.
And then we are planning on voting now for FY '25, so starting July 1,
Right.
2024, we would open this up.
Right, so the timeline that we've tried to think through is about this time, January, we hope, January, February, we determine the trust will determine the amount of revenue that's available for distribution, notify all the projects that are, that have operating or maintenance fund. They then can fill out, I hate to call it an application, it's a request form, telling us how much they want, generally what it will be used for, and then whether they would like it to be paid annually or biannually. Then submit that. That will then come to this body. We will approve those or not allow them, and then payment will be made. Distributions will start being made in July.
Yeah, and that's an excellent point to keep in mind here, that this would be just authorizing this, that the the request forms would be filled out. Really, the full distribution individually per project would not be approved until the May regularly scheduled meeting.
Right.
So that opens up a whole other thing about when you have those projects with 3 different sub-projects within them. How is that going to be allocated and distributed? That's something that, I mean, is that under our purview? Or we just look at it and say, no, you have $100,000 here that you can access? And then what if we have
Well,
$300,000
I think
worth of
ultimately
requests?
it is up to us, because ultimately those applications, so what if it's $100,000 is available for, I keep picking on Innovation District, available for Innovation District, and all 3 of those operators request $100,000.
Right.
Ultimately, this body is the body that's going to have to make that determination.
Okay.
I'm thinking that we want to get ahead of that a little bit.
And for things that aren't clearly laid out in either in trust indenture or into the original MAPS 4 resolution, we can also look to the city manager as general manager of the trust to get guidance on how that would fit in the overall.
Yes. Keeping me on track.
I guess I'm struggling with how do you do that in a way that doesn't upset everybody?
Oh, it's going to.
I'm like,
I'm not sure we can, Kevin.
right. It's like, okay, 3,
Right. And it may be that for that, it may be that we want to, well, it may be that we want to visit with the city manager and bring that recommendation, if we decide today to go ahead and make some growth available, then bring that with the recommendation to the May meeting. Give us a little bit of time to sort that out.
another one of the panelists and I were discussing this. I'm not going to say who, but given that effectively 2 out of the 3 years have been completed, if we were to make an allocation to say, all right, we've completed 2/3 of the time, so we'll release 2/3 of the dollars or of the profit, or there's still 1/3 left to go, so we're only going to release 1/3 of the profits as a more conservative approach. I'm not suggesting anything, but if we were inclined to do something, that would be sort of a calculated way to think about the distribution in the form of the time remaining or time completed. But
I also think some of the justification for that kind of recommendation comes from the fact that we had a loss in our corpus at the beginning of this process, and we're trying to guard against that so that next year at this time, there might still be a distribution, so that we can launch into a pattern of continued distributions with less risk for skipped distribution years if the market changes.
I think that's sound logic. I mean, I would suggest then 33% based upon that logic and the time remaining.
Okay.
You said how much, 30%?
1/3 of the profit could be distributed based upon us saying, well, effectively 2 out of the 3 years have been completed, so 33% of the profits could be released. Now, to your point, Laura, to protect the corpus, because we were at a loss, we're going to lean more conservative and not distribute 2/3 of what's available and just wait until we complete the 12 months before everything is like at 12 quarters.
I like the more conservative approach, but it does feel a little, we've completed 2/3 of the time period, but we're going to distribute 1/3. It feels like if we're going to use that, we would do 2/3 because it's been 2/3 of the 12 quarters. But I do kind of like a little more conservative approach.
And I would counter with that and say, if somebody was saying that to us, that per our policy, it could be 0. I mean, legitimately, it could be. So 33% is a pretty good deal. I mean, so.
And then in essence, they only have, I mean, the reality is there is only 1 year left for them to wait, to your point, Brent.
I'll send them your way. Um, Yeah. Other thoughts? Other discussion? Jessica, I know you're thinking something down there. Okay, okay. So I think we've talked about 4 million to start with, and then we've talked about 25%, we've talked about a third, we've talked about 2/3. Anybody? So,
okay, so we're on item 2B.
yes,
We're discussing.
correct.
So at this point, would you like a motion for a recommendation?
If we're ready to go there?
It
I mean, we
doesn't,
need, yes, we need to, that
but
language.
there's no,
For C, yeah, for C. We don't do anything on B, but when we move to, are we ready to move to C? Are we ready to move to C?
I have one more
Okay.
question. So, I know we're looking at a distribution this year, but if the spending policy says after 12 quarters, why is it that we're required to distribute now and not after the 12 quarters is occurred?
So the way I've always interpreted, and like I said, this may be because this is how we do this in my business, is it's the number of quarters that you have up to 12, and then it's the rolling 12. So you don't necessarily have to have, I don't think it says we have to have 12 quarters. I think it would it allows the flexibility to make a distribution,
Sean,
but
can you put the
recognizing 12
spending
quarters.
policy back
Yeah,
up?
okay.
So, Madam Chair.
Yes.
I think that one of the things during this discussion, Bob, that's made me a little bit more comfortable with this
Okay,
is that the policy says average market value of the investment portfolio over the last 12 calendar quarters. It doesn't say that we can't spend anything for 12 calendar quarters. It says that you're using that 12 calendar quarters as your denominator on your calculation to make sure that you've earned money.
yes.
Does that help at all?
That's not the way I'm reading it, but
Okay.
I understand what you're saying.
And I understand where you're coming from there, too.
Yes,
Right, so.
I do too.
But I'm fine, I mean, that's decent logic.
Okay. Other discussion? Are we ready to move to item C? Okay. Item 2C, resolution authorizing the distribution of funds for fiscal year 2025 not to exceed 4% of the average market value of the investment portfolio.
And I will need to coordinate with Mickey on this, but any recommendation that we need, we would need a dollar amount. Is that correct? The way the resolution is written, that any sort of motion that we have for this resolution would be a dollar amount that we're looking for.
So what would the maximum amount be then?
The maximum amount would be 4% of the ending market value, which we can calculate.
$4.8 million.
$1.8 million.
Okay.
Is that above purpose? Do we have that much above purpose?
So just to clarify, this action today would set our precedent moving forward and our 12 rolling calendar years that you were talking about earlier. So this is the meeting, this month would be the meeting that we look at moving forward as to what our distribution amounts would be for the coming fiscal year.
For yes, for fiscal year starting in July.
Yes.
Yes, but, and let me make sure that I'm fully answering your question. I don't think today's decision sets the precedent for FY '26 and '27. I think each year we'll have this conversation and make this decision. The decision for today is the funds that will be available from starting in July. Does that make it clear or muddy?
And I think ideally, this will come in a February meeting.
Right.
Because we did have a special meeting here in March, because we didn't get to this in February. First time,
Yeah.
but we didn't get to it. So it would come at the regularly scheduled February meeting.
And this, I might actually bring Doug to the podium on this. Like, hypothetically, if we have an amount, Doug, can you explain to the trustees what you would recommend us do with that particular amount that we've set aside for distribution?
So I think we've gone over this very basic level before, but Sean, could you put the 4.8 in the distribution amount? I thought that would be useful to take a look at that, so that's the amount that could be. But my suggestion would be to determine that amount that you are going to be distributing, and as soon as possible, raise that amount in cash to immunize it from market volatility and earn 5% per year on those amounts. And I would say that for this year, maybe next year and going forward, once we do have more of a cushion built up against the corpus, is maybe to maintain up to 2 years, as long as the interest rates remain in the current inverted yield curve. Is that?
Yes.
Okay. Yeah, from an investment perspective, it shields the portfolio from any more volatility than you have to endure. But it doesn't, in today's environment, it doesn't unduly reduce the amount of return that could be earned on the overall portfolio. I would sense that that amount would still maintain classified as part of the investment portfolio under the statute. So that's very short explanation of that.
No, I think that's wise.
Okay.
Yeah. So do we need to include that in the resolution, or is that just a management?
That would be an investment management, because that would still be within our investment policy.
Okay,
So we're
okay.
still within
So we
those
don't-
guidelines, so we're not doing anything that's deviating because we have cash
Got it.
as part of our investment
Okay,
policy.
thank you. Okay, so item 2C, do we have anybody that would like to make a motion?
I hate to overwork this, but can I ask Doug a question again on that, what he just said? Okay, so we've got $4.8 million, and it exceeds that's above and beyond our corpus.
That is a good question.
I think the answer was yes.
I believe so. It should be
Yeah,
4%, right.
Yeah. And so would you,
yeah, so if you do,
You're right.
it would fall below. So you can see the income here. Well, that's just income. So we have gain of $5 million and you have income of 4.4, but because of the expenses over that period of time and the fact that we had 3 different tranches of investment going into this, yeah, if you raise, you can't spend 4.8.
right,
Right.
and I would not recommend that. But if you could would you recommend taking that 4.8, put it into cash, put it in a money market or something, earn the 5% that we're earning today, but then we come back and say, of that, we're willing to set aside, I'll use Kevin's
30.
recommendation, 33% of that 4.8 for distribution in this next fiscal year.
Okay, so my understanding was, so you got the 4.8, let's say we do 33%, take 33% of the 4.8 and keep it in, and put it in the money market. The rest of it stays invested.
Right.
Okay, but I'm concerned that, shouldn't we take 33% of the 4.4? Shouldn't we take 33% of the net and not of that gross
Not of
earnings?
the 4%,
Because
yeah.
if we do that, we're going to slowly but surely nickel and dime our corpus down.
Yes, so just so I'm clarifying this in my mind, so the $4.4 million that you're talking about, that is the amount above corpus,
Right.
correct?
But that's as of
that's-
12/31, yes?
Right.
Or 229? Oh, okay.
No, the chart we just looked at was that 1231? Okay, yes,
Oh, okay.
right, yeah.
The other one.
February is,
February's 4.8,
right,
but we should use 1231.
It
which is
does say calendar
4.4.
quarter, yeah.
yeah.
So what is the number? Is the number 4.4?
I was thinking,
I was trying to multiply here to figure out what the dollar amount is that we need to tell Mickey.
Well, that's what we want to.
That's what I'm trying to
I
get
mean,
here.
if this is what we're going to use moving forward, is the end of the calendar year, if we're going to be in February making
Right.
these decisions, then yes, we need to probably be using the December.
I agree.
Yes.
okay, so what's the dollar amount?
If you
Somebody's got-
typed in
somebody doing some good-
4.4 into
Yeah,
this
4.4,
spreadsheet.
then times 1/3,
Okay,
divided by 3.
okay, can you put the 1453 or 52 in the distribution amount box?
Circular. Are we ready for a motion on this?
Well, do we have any more discussion? Jessica, go ahead.
Is this, okay, I'm not sure of all the projects that need the dollars. Is this going to satisfy some of those projects to feel a little better about moving forward with their individual MAPS 4 project?
Yes, it will not be as much as they're anticipating because they're anticipating 4%. But, I mean, it's more than, it's more than they have now.
And this could be all that they would receive for FY '25.
Correct.
Okay.
It's either that or they wait another year for anything.
Well, I don't, yeah, it's not 33% or zero. We have the flexibility to do the full 4.2, we have the flexibility to do half of it, we have flexibility to do what, you know, a myriad of options. So that is, we are making that decision. And it's not what they're expecting, it's not even what they're planning on. But, you know, I think they also recognize that there is the long term, even though they're feeling the pressure of the near term, they also understand that this is, the intent is for long-term
Right.
sustainability.
And I would think if we looked at this and instead of having $4 million of earnings, we could show that we were plus 20 million, we would look at this a lot different in respect to that, but that's just,
Well, and at some point, they're going to submit applications,
Right.
and we're going to make a decision, a recommendation on those applications. And in the event that someone can come in and make an extremely good case to us, I would presume that this is a decision that the board could reconsider. We'd have to have some pretty strong argument to reconsider it, but
I think that puts us in a really difficult spot.
does.
I think when we make this decision, this is the decision.
okay.
I think that it is my opinion. Now, I am just one voice on this trust, but I think if we put ourselves in the position of if, you know, Matt comes to us and he's a really good pitcher, and he gives us a really compelling story, that we're going to change the percentage for, I think that puts us in a really difficult, we're going to start moving forward, we would have 10 compelling presentations every year. So I think we need to, whatever we set is what it is for the year.
So it kind of comes down to our fiduciary responsibility is to the trust and not necessarily to the projects.
I
I'm
would
looking
say,
I'm looking at council
Yeah.
on that one.
I would say that's accurate,
Okay.
politically.
yeah. But the trust is for the benefit of the projects and the citizens.
Right.
Yeah.
But I'm not trying to be argumentative here, but it's also for the perpetuation of those funds.
Yes. No, I don't disagree.
Right.
I don't disagree. But I do think holding funds for the purpose of holding funds and not fulfilling the purpose of the resolution, not fulfilling the purpose of the projects that the voters supported is not our job.
And my only thing is some of that language in that 4%, is that gonna be problematic, where it said at least 4%? That's just my question. I need a legal person to tell me.
Oh, is that my microphone on? That this is not 4%, at least 4% of the total amount that theoretically could be expended?
Yeah.
I mean, I think there is some level of discretion built into this just because of the 12 calendar quarters and all of the other factors. And so it's ultimately up to you all as the trustees.
But I think what Jessica is referencing, I'm not trying to put words in your mouth, but are you referencing the language of the indenture itself? Yeah.
I don't have that in front of me, but this, at least the spending policy statement is a goal, not necessarily something that's black and white.
Yeah. I just can't remember what the indenture itself says.
I just understand how the projects that are coming along right now, they need operating dollars to operate right now. And some of the other projects do not and will not need money for a while on down the line. So I'm not going to beat this. I think we all understand what we need to do and that we need to get the funds out there as quickly as possible. I think we've had a rough investment time and that we're trying to be mindful and guard the dollars in order to make sure we have money next year and the year after that, right? But I want this amount to be in a significant way meaningful to the projects that need it the most. That's my only concern.
And I don't disagree. It needs to be an amount that's going to, be meaningful. Give us 1 second.
I think the challenge, I understand what you're saying. I think the challenge for me is like, I feel like I have zero visibility into the urgency of those needs that you're referring to. So for me, it's like, I'm just looking at the policy and what we can do.
Buried.
Like, should we be given insight into that?
Sorry, Kevin.
There are so many different projects coming online right now, and I know that some are a little bit more funded, had some funding coming in with the organization itself than others. And so, to me, I don't want to but it goes back to being fair and being equitable to all of the projects involved. And I really think we're going to have the discussion sooner rather than later about the multiple operators in one line item, because I can already tell you the phone calls we're going to get tomorrow about if somebody's taking funds out and this person is like, well, we don't need the funds. Are we going to get more funds if we don't take our funds out? So I think we need to have just some answers to those questions that are, again, fair and equitable, but just in how we presented the timeline approach for these projects to come online. Some need them right now. Some will not need them until 5 years from now, so.
No, you're exactly right. Some of the projects that are needing funds now are needing those funds to assist with the development of the project and the development of the programming for the project. But the indenture allows for that. Okay, we looked up the resolution, and it says the spending policy of the trust will target annual spending equal to at least 4% of the principal. So it's target, but at least 4%. So thank you for pulling that up. So does that change?
So I personally think I would feel comfortable under that language to say to go to 50% of the $4.4 million. And the reason I say that is because we are about 50%, actually a little bit more than 50% of the way through our quarters, as Brent pointed out earlier. So I'll just throw that out there.
I would agree with Laura on that.
Yeah,
I would agree as well.
okay. And I would too, 50% of the 4.2. Or the March.
Or the March, I'm sorry. that-
Okay, so 50% of 4% of the growth or over corpus as of 12/31.
Right.
Okay. Right. Okay, are we good? Okay, are we ready to move to item 2C? Do I have a motion?
I make a motion,
Okay,
Give her the amount.
how do I say this?
okay.
I make a motion that 50% of the 4.4 million be available for distribution to the projects that
Okay, for FY25?
FY '25. 2.2 million.
Yes, correct.
You can clean that up.
Yeah. So we have a motion. Do we have a second? Oh, Jessica, thank you for seconding. All those in favor, please cast your votes. Pro or con?
I always forget to take that off. Thanks for pushing that button to remind me.
Oh, sorry. Okay. Okay, motion passes. Thank you. And thank you all for that very thoughtful conversation. I think that we went ahead and covered some groundwork for future years. So that was really, really important.
Yes, and with that, I know that there are people most likely watching this meeting that are happening, and that the city treasurer's office and the city's finance department will reach out to the operators with these amounts calculated for each project with the request form that can be sent. And we'll have an email address set up where they can return those forms, and then it will go forward that way. So that'll be the distribution process. But we can get rolling on that immediately once this action is taken. And with that, I also want to say this was a thank you to the trustees. It was a difficult but interesting conversation. Thank you to Mickey and Amy from the clerk's office, and Laura and Amy Douglas, who wasn't here today, but she was pivotal in getting some of this wording together, because we wanted flexibility, but at the same time we wanted to have the clarity as we move forward with that. So I just wanted to appreciate that. And thank you to Sean for his Excel wizardry and going back and forth so many times during the time. Sean and
Master of the
Mitchell's
screens down there.
been
Matt,
helpful with that.
Matt, can
Yes.
the trustees please get a copy of that sheet that showed the amount by project
Absolutely.
of the distribution that we agreed to here today, and also a copy of the application that people will be asked to send in,
Yes.
just in case we get questions or something about
Yeah, we
that.
can distribute that to the whole body.
Thank you.
Matt, thank you. I know this was a lot of work on y'all's end, so. Jessica, I think your comments are spot on, that we, prior to our May meeting, need to be thinking about how we divide out those funds. And Matt and I will reach out to city manager and see if the city manager has any guidance. But we're going to have another full conversation at our next meeting.
Yeah, and to Kevin's point, I think, it is one thing to look at numbers on this. It's another thing to actually see the work in action on some of the subcommittees and the work that we do on the Citizens Advisory Board. So maybe, I'm just thinking, at our next investment trust meeting, we just have maybe something from David Todd, a brief overview of some of the projects going on, so the entire committee can better understand all of the different components, because there's a lot of moving parts to it, and it's an engineering feat, but I really think it would be helpful just to see some of the updates that are going on.
That's a great point, Jessica. That's a great point. Okay, moving on to item 3, comments from trustees, staff, interested parties. Do we have any members of the public signed up to speak today? No? Okay, comments from staff? Okay, trustees, any additional comments? Kevin?
Are we, I guess, tabling the conversation around, okay, now that we've decided to make the distribution, the sub-projects within the projects, are we reserving that for a different
Yes.
conversation until Matt
Yes.
gets some information? Okay,
And we have an agenda item. Until we have an agenda item that we can talk about.
fair enough.
Okay, any other questions? Okay, thank you so much for being here and again for your thoughtful discussion. We are adjourned.